Time once again to check on the latest earnings trends with Zacks Director of Equity Research, Dirk Van Dyke. Dirk, in this week's commentary, you tell us that annual estimate increases are outnumbering cuts by a 5-4 margin. Is this due primarily to the continued growing expectation on the street that the U.S. recession is going to be over by autumn?
I think in part it is, but keep in mind that we're approaching a seasonal low point for the total number of estimate activity. So really what we're seeing is the number of cuts in the system rolling off faster than the number of increases. But I would count it as good news, because after all, the trend in earnings estimates is much more important than the actual level.
You're not concerned that analysts might be getting a little too giddy a little too soon?
I am concerned about that. I mean, I really don't see the green shoots as really taking hold in the economy. But then again, the analyst data is, they're close to the ground looking at the individual companies, and it's worth taking what the consensus of them are seeing seriously.
Well, the degree of upturn in these estimates numbers still pales by comparison to the market rally.
Oh yeah, without a doubt. I think they're, if one goes back, to early March, Armageddon was still very much on the table. Now I think we've taken that, at least for the time being, off the table. That a lot of the policy responses that we have succeeded in at least stabilizing us a bit at a lower level, but just no longer free falling doesn't mean that you're about to rebound.
So is it correct then to say that as far as earnings are concerned, the market has written off 2009?
That's probably the case, but the overall earnings expectations for this year have started to stabilize. They sort of started off up around $70 for the year if you go back 6 months to 8 months or so. Now it's about 57 and a quarter, and it sort of stabilized in there, and I'd consider that some pretty decent news. I still have my questions about the sustainability, and again, given the low overall number of estimate revisions that we're seeing right now, totally normal seasonal phenomenon, but one to consider anyways, that one has to put less weight on them than one would in the middle of earnings season if you're seeing the same sort of ratio. And let's also keep in mind, while this 1.25 revisions ratio for both 2009 and 2010, they both happen to come in exactly the same, is, it looks great compared to go back 6 months ago and where we're seeing 4 or 5 cuts for every increase. By historic measures, it's not, a let's break out the champagne number.
Right.
It's solid, but it's not, high by any historical measure.
So is the market rally that we're seeing right now based on 2010 earnings numbers, the outlook for 2010 earnings?
Yeah, the 2010 numbers have stabilized. They're a lot higher than the numbers that we're seeing for 2009.
But still just rising slowly.
Well, it sort of stabilized. They haven't really gone up in terms, but I'm talking the absolute numbers are significantly higher, about 24% higher than what's now expected for 2009. But in terms of the rate of decline, they also have sort of stabilized, at $72.50.
So bottom line, would you then agree, as some on the street do, that a strong earnings rebound is not likely to materialize very quickly here?
No, I mean, in the fourth quarter, perhaps because you have such easy comparisons on a year-over-year basis, but by any long-term historical measure, no, I don't see that happening.
Standout industries for Q2?
In terms of the revisions, actually the consumer numbers for the full year have been the strongest. In terms of the year-over-year growth rate, it's really going to be the sort of the three stable areas, healthcare, consumer staples, and utilities that are going to be down the least. Consumer staples is expected to eke out a 1.2% gain, and the healthcare and the utilities are both expected to be down mid-single digits. Everybody else, you're talking about at least a 25% decline, getting down to materials where, you're looking at a year-over-year 85% decline. I mean, that's a heck of a haul.
All right, get over to Zacks.com to take a look at all of the numbers, the charts, the graphs that Dirk puts into his most current earnings trends, and more commentary than we have time to talk about here. You go down the homepage until you see Dirk's picture, click the headline right next to it. It'll take you right to all of the latest earnings trends information. With Dirk Van Dyke, I'm Terry Ruffalo.